Hello everybody, this is Dan Hussey with RGO Futures in Chicago, bringing you our strategy of the week for the S&P 500. I pulled up here a chart. This is a daily continuous chart of the S&Ps showing the highs post the 2008-2009 recession here from the 1591 area. Actually, a Fibonacci retracement drawn from that high to the highs after here in excuse me, 2015, created the support for a three-wave pullback that traded both into full 50% longs into the 1860 area back in early 2016. That also produced equal legs in a retracement down into that test of the 1800 area in early 2016. The rest of the year, the S&P found a rally and traded up towards a 2,260 upside target. That was the negative 23.6 line from that full 50% retracement, and the support level that was found into the 1800s. We found that upside target here into the end of the year. So the whole year could literally be defined by one big rally and a low that was found back in February that was, like I said, equal legs down as well as full 50% retracements. So seeing a technical level find support for the S&P and a market that's moved up into new all-time highs and hit upside targets. The real question is what is next for the S&P 500. So I have here now the Emini contract up, and again that rally that happened from the 1800 handle to the 2260 upside targets highlighted here on the chart, and it was that support level that it found, and now same anchor new high. If the market's going to do a substantial pullback at this point in time, same anchor new high would produce what is referred to as the next in series full 50% long, or the next in series kind of support level that we would look for the market to actually pull back into. So it's a long ways off, but it would mean probably a larger three-wave correction down into the 1935 area at this time. And then from 1935s, we would expect to rally up towards the 2440 area. There's definitely support levels that can hold long before this kind of daily chart plays out, and we do see a pullback to the 1935s, but that's our larger support if it goes there. This is something we can look for into the first half of the year, that if there is a pullback and a big pullback, 300 points, that's where we'd look for it. We can dial down then into 4-hour chart and take a look at the rally that's occurred basically since the U.S. presidential election was over. Okay, so going back to November, you can see the dip down the market took and actually went limit down overnight during the election back on November 8th. And from that moment and from the lows at, from the 2028 half lows from overnight limit down on the 8th, the market has since then rallied up towards the current high of a 2,278 quarter. So quite an impressive move from the S&Ps, and inside of this leg there is now, if we concentrate just on this most recent move up, there's a trend that's occurring inside of this leg. So it's important to now kind of dial down, in my opinion, and start looking at, okay, well, what this price action be telling us. We had a short-term high that was formed on the rally up at the 210 or 2,102 area. That's the place that I would start. And because we're kind of blowing out, the market's really going fast here. I'm drawing from a high to a high, the fib pullback. There's definitely an initial pullback that occurred. It front ran that level pretty aggressively and actually found some trendline support that began more or less the remainder of the track towards highs into the 2,200 area. From there, the market pulled back And this is where it's important to find now basically the highs, or try to reverse engineer why the market held a particular level. And we'll pull out to the 240 or the 4-hour chart so we can kind of take a look at this together. So it's as if the market was either pulling into a full 50% pullback from this 2142 area, or it's using the 2146 prior highs before the election to new highs. Like, it's as if you remove this price action altogether and use that as a high to high, you saw the first in the series begin. This is the first one we're able to observe. It's not really one you ever end up being able to like execute on, because the point is we're trying to find a pattern. What can we define as the trend going higher? Because if we can define the trend going higher, when that pattern breaks, you have a reversal and a confirmation of a reversal that then can be acted upon, et cetera, et cetera. And while a market's trending, you simply want to hop in with the trend, because while trends are going on, they are few and far between. But when markets are trending, it's very important to try to be a part of it, because it's some of the quickest and most aggressive money you can make in trading. You also have to be aware that there's a clear way to define when trends break. And when a trend breaks, you respect that. So the market traded off of some fictional 50% line that we're kind of finding, and it actually blew through its next target. So the 2,222 area just blew through. So I'm actually now going to use from that new high to high as the next full 50% retracement. And this is where we're getting most as aggressive as we can with trying to find support and trying to defend or try to figure out what the pattern is going higher, right? So full 50% retracements here from a new high to high could take you into this 2240 area. Sure enough, in the short term, if we look at this as 3 waves back into full 50% retracements, you get both full 50% longs and equal legs into the 2240 area. Pretty aggressive 10 handle risk, because below 2230s we could see a larger pullback, and potentially the same anchor new high that took us up into those highs initially could play out, and you could see the market test all the way down towards the 2210 area. So that's below 2230. We'd expect continuation lower into the 2210. To the upside, we can look for 2,280. And sorry, I accidentally deleted one of these. Now I fixed it. Yeah, 2,280. You can see all the targets there, and more or less, we're going to be looking for continuation higher. But if the market starts to pull back and it starts just breaking through these levels give you pretty defined risk for a setup if you want to take one. But at the end of the day, if they break, that tells you something else about the market, and it could be the start of a reversal lower. So regardless if you're acting on them, technical indicators, price measurement tools, ways of measuring trend can ultimately give you a way of confirming its reversal or ending. And in this case, we're looking for the trend to continue until it fails. With that being said, I'm Dan Hussey with RJO Futures, and we'll be back with you as price action develops. Take care, everyone.